Welcome to ShareViews. We're here with Stefano Barbaglio from Cassiopeia Services and with James Parsons, the CEO of Sound Energy. How are you today, James?
Very well, thank you. Good to be back, Zach.
Right, so you're sort of returning in triumph, really. Your company just won the AIM Best Company of the Year for various reasons, I presume. One of them is probably the share price rise that we've had, which has been stellar. But I mean, the company's been transformed really over the last 12 months on a fundamental basis. We were looking at Italy and sort of waiting, and then all of a sudden it became about Morocco. Could you explain the transformation?
Yeah, absolutely. We have always been, since 2011, an onshore gas player. So high-value gas, piped gas, that's our focus. We're believers long-term in strong European gas fundamentals. So our sort of corporate birthplace in terms of the current management has been Italy, 18 licenses. It's gone very well for us, some early-stage production, and a really big well coming up with Bedelia close to Milan. And then last summer, we broadened that out to include Morocco. Morocco is low risk. It's an emerging market with core growth. It's got the right gas fundamentals, a strong gas price. It imports 90% of its hydrocarbons, as does Italy. So we've really now got a broader portfolio. The intent of Morocco was to diversify our portfolio, which was only Italy at the time, and it's really worked out for us. You know, these first couple of wells on Tendrara, close to the Algerian border, have transformed our fortunes.
So moving to Morocco was not like, oh, the Italy thing is not happening, or it's not going well, or it's not as good as we thought. It was actually a positive move.
It was a conscious strategy to diversify, and we've been looking for, the recipe here, if you like, is high-value piped gas. It's assets which have potential to be supergiant. In terms of Tendrara, you look at Sidi Mokhtar, you look at Bedelia. These are our three strategic plays, huge if they work in the upside case. So we've really been looking for that balance of risk and reward.
And it was also the case that at that time, it was a low in the market, and you were also looking for cheap assets from distressed sellers, let's say.
And there are a lot of assets out there at the moment. They're all available. They're all cheap. We're at a unique place in the cycle where we're cashed up relatively. We're now $65 million in the bank at this point in time, and that's a great time to be there. So very much opportunistically looking around. Yeah.
So you have that money in the bank. Is that enough for the next?
It's never enough. I mean, no CEO will ever tell you he's got enough cash. We've got enough to get ourselves to first gas and beyond on Tendrara. That's the point at which it becomes self-sustaining in terms of cash flow. You pay for the future exploration out of those cash flows if you wish. So yes, we've got enough to do plan A. Of course, we'd like to continue to broaden and grow the business, and it's a great time to be doing that counter-cyclically.
Right.
Okay, on the Morocco, I've got a few questions from investors. They are asking about the Outposts wells you have on the pipeline. So can you clarify your plans on the re-entry of the previously drilled wells on the Tendrara license and how they can prove the potential of destruction?
Yeah, Tendrara is very, very special. Algeria geology, drilled from Morocco, with all the benefits of the high growth in Morocco, the strong fiscal regime, and essentially Morocco has never had any proven hydrocarbon basins. Algeria, one of the largest gas exporters in the world. So what we're coming in and doing is drilling that same well understood geology, Taggy Reservoir, and slightly deeper the Paleozoic, and we've had some success there. So 2 wells, first one was vertical, 17 million scuffs a day, huge flow rates for this geology. Second one horizontal, we've got 32 million scuffs a day, which we expect to be well north of 40 by the time we're done there. And then we're looking at what's the go-forward program, and there's a sort of a TCF journey which we can build on. Let's be very clear. We think we've proved up 300 to 500 BCF at the moment, call it half a TCF. The first Outpost well is going to take us from half to 1.5, we believe, in the upside case. We've then got a combination of the next well, TE9, plus 2D seismic, which we think can take us from 1.5 to 4, and thereafter there's an upside case of tens of TCFs. Now, that's a little bit out there. We have to caveat that and say there's plenty of drilling and seismic to do to prove that up, but the potential is there, and hugely transformational for our company.
And James, we have got other 2 projects in Morocco, which are the Merija exploration permit, that I understand that Luca father he called Jewel, and also the Sidi Mokhtar. So would you like to tell us a little bit more about these 2 projects?
Absolutely. So Merija is the adjacent license to Tendrara, and we have an option which we're exercising at the moment to come into that asset as well, so that we're getting a much larger sort of position. I mean, Merija and Tendrara together are about the size of Belgium, just to give you a sense for scale here. So it's enormous. It's earlier stage than Tendrara, but it's the same fundamental bet, just an extension of the play. And if you look at the other asset, which is actually our second strategic asset, it's Sidi Mokhtar. So it's the other side of Morocco, and this one is quite different. 2 wells on structure on this Kachula gas discovery, and we're very lucky to have to really just plug those in for an extended well test, and then easy to commercialise, right next to huge demand with OCP, the state phosphate producer, phosphate being one of the largest exports from Morocco. So, nearby infrastructure, nearby demand, and that sort of $6 to $9 per scuff gas price, which is incredible in this climate.
So if we go back to Italy and your flagship assets, Bedelia, which has an present value of over £400 million, what are your drilling plans there?
So we just signed the rig contract on Bedelia. We'll be mobilising the rig later this month, December. We'll then be starting to drill in Q1 next year, and that's sort of a 4 to 5 month drill. So by summer next year, we'll know the outcome. And as you rightly say, this is a huge asset. The potential here, upside case again, if you do the NPV 10 divided by fully diluted shares in issue, you're at £1.40 accretion to the current share price. So a lot to play for, huge potential. That's been our strategy, is to find these game-changing assets. Yes, we're going to take some risk. It's good old-fashioned upstream, risk and reward, but the reward is huge if it works. On Tendrara, it worked. We're now looking to repeat that on Bedelia and on Sidi Mokhtar.
And you have Schlumberger as a partner for the drilling, right?
Exactly right. So we've got two key partnerships which have really sort of shaped us, taken us to where we are now. Firstly, a cornerstone investor who came in 2.5, 3 years ago and really gave us the ability to fund the business and structure it properly. They also have a non-exec director on the board. And secondly is Schlumberger at the drill bit, sort of funding those early exploration wells, but also coming in and helping us technically de-risk the geology. So the combination of those two has changed our futures, and I think that's one of the distinguishing factors of Sound.
Okay, I just want to, the overall picture here, we've had the detail that you've given. Clearly, if you're an oil and gas investor over recent years, you think of Tullow Oil, you think of Cairn Energy, who went from being minnows to being heroes. Is that what you're ideally hoping for? Is that something realistic as far as Sound Energy is concerned?
Well, look, we're in it for the TCFs, not the trophies here. This isn't a lifestyle vehicle. This isn't a sort of a James Ego vehicle. This is very much focused on doing the right thing for the assets, for the countries we're resident in. We've selected, as I've said, a very specific strategy, and we're partway through executing that. I think it's fair to say, I used the analogy of food earlier. It's true, like all good meals, that at the end, that's going to be the sweetest part, right? So we have to see what the end game is here. There's an awful lot to play for. It's true that Tendrara is an asset which would naturally sit within a major's portfolio, and we have to see how that plays out.
Right, the other problem that you have, or that there can be, is that people get too overly excited about a company or a stock, and it becomes a victim of hype, etc. We're not in that stage at the moment?
Well, we hear this a lot. People saying, "Look, you've done a 3 or 4x. Has it gone too far? Has it run ahead of itself?" But actually, that isn't our perspective. Our perspective is it is trading now at a huge discount to an enormous asset in Tendrara. Now, Bedelia is still we have to see how that goes. But on Tendrara, where we've had early stage success, if you take any sensible NPV calculation there of already what we've got in the bag, plus on a risk basis the exploration, there's a huge discount there, and that's the perspective we have, and that's the sort of message we like to get out there.
So you think you've discovered the majority of what there is there, or is there still plenty?
Not at all. Very early stage. At the moment we're at that 300 to 500 BCF, so a relatively small scale, already commercial, already able to build the infrastructure and connect it up, get ourselves to first gas in 2.5 years. But longer term, there are potentially tens of TCFs out there, and we're absolutely going chasing that with Schlumberger's help and with the right cash balance now. We recently introduced 2 institutions to the register just a few weeks ago now, and I think that's great. This process of gradually moving or transitioning from completely retail to retail plus institutional, long overdue for us, and we're looking forward to continuing that journey.
James, I have a tricky question for you now. So, at any point over the last 12 months, have you had any informal discussion or have been approached by Shell or Siemens regarding any buyout of the company or any of your assets?
Look, we welcome all questions, whether I can answer them or not. I think what I'd say is my DNA is that of a deal maker. And so I'm talking to everyone all of the time, like every good deal maker. That's okay. And as I sort of said earlier, this food analogy is a good one. At the end of every meal, you have the sweet part, and that's how it's going to be with our journey. The sweetest part is at the end.
Okay.
All right, final question here. It says here you're the man of the moment. You've proven your potential or your ability in the field over the last couple of years. Surely that would make you attractive to, let's say, the large, as well as your company being attractive, you yourself could be regarded as somebody who might be offered a management role somewhere else.
Well, I've already got the best role in the industry, to be honest. At this point in time, there's no doubt about that. It's a team effort. Sound has been built up over 5 years by a team of close-knit professionals, a blend of commercial, subsurface, technical, financial skills, and it's working well. It's coming together, and that team will stay together until we get to our end game.
And you think, let's say, for you personally, the reward of being at this company would be, if everything goes well, as much as you would have at any, let's say, a multinational?
Absolutely. That was my background. 12 years Shell, 5 years into pipeline, and then Sound Energy, gradually getting smaller. I'm now in my sweet spot, what I enjoy doing, and we're having fun, and we're creating value.
James Parsons, thank you very much.
Thank you.
That's it for ShareViews.